Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to our top stock pick segment. I am Jeremy Mullen. Brian Bowen will be after me to do his pick, but first I'm going to do Workday, ticker symbol WDAY. Now, Workday is a cloud-based software company that provides enterprise-level solutions for managing both financial and human resource operations. The stock has seen some volatility this year, hitting all-time highs in February, but falling 35% from those highs as recently as August. The trend has reversed upwards after a recent earnings report, and now the stock is a consolidation period as we head into the next earnings report at the end of November. So let's look at Workday today. I would like to talk more about what this company does, the recent earnings report, go over what analysts are saying, and then look at some charts. Okay, so looking at the profile page here, we have the Zacks ranked number 1, strong buy. We have style scores of F in value, C in growth, and B in momentum. Now that F in value, of course, we look down here at the forward PE, it's at 35. So some value investors might have an issue for that. What we're going to try to do here is look for Workday to grow into that valuation by beating on earnings. Before we talk about earnings, though, let's talk about Workday. Incorporated in 2005, so about a 20-year-old company. They are headquartered in Pleasanton, California. The stock is valued at $65 billion, which you can see right here under market cap. And the company employs around 19,000 people. Now, Workday provides cloud-based solutions for managing key business functions. Its human capital management system focuses on the HR, while the financial management aspect covers financial operations. Workday also offers planning and analytic tools for budgeting and forecasting, enabling data-driven decision-making. Now, let's look at the earnings. We can bring up the price and EPS to price chart, which I love just to give us an idea of how this company performs on earnings. As you can see, we're in the middle of a nice winning streak here. The last miss was back in 2022 when they missed by about 3.5% there. Now, as you can see here, we had a nasty dip back in May here. So you can see 10% EPS beat. The stock came down, and recently we had a 7% EPS beat and the stock went up. So what's the deal there? Well, back in May, the company kind of issued a conservative guidance. The forward guidance for subscription revenue growth wasn't what the market expected. But recently, the Workday reassured investors about the company's growth prospects. They raised their full-year outlook for subscription revenue, which signaled confidence in both the business momentum and consumer demand. Now, looking down the road, Workday is targeting a 30% operating margin by 2027. This is up from 25%. And they are also maintaining their 15% annual subscription growth rate. So that's the difference between the two quarters and why the stock went down versus up. Basically, their forward guidance has improved. If we can get that same reiteration and growth outlook next quarter, we should see a similar price reaction in the stock. Now, something also to look out for, management commented and really emphasized about AI innovation and a unified platform as key growth drivers. So that's something to look out for on the next call and next earnings. In addition to all that, the company approved a $1 billion share repurchase program. So they will be buying the stock back. Now let's look at what the analysts are saying. This is really important. We see all this coverage, all these analysts are covering the stock, and most of them are taking numbers higher. So that's what you want to see. A couple down are taking them lower on the short-term time frame, but for the most part, we're seeing analysts revise higher since the last earnings report. And you can see the numbers on how they're moving, okay? So 167 to 172, the current quarter, and we're trending higher for next quarter, current year, and next year. So all that is going in the right direction. That's something that you want to see. And with that, a lot of the analysts are raising price targets. So we have Piper Sandler with a 285 target, Canaccord at 300, Goldman Sachs 305, and JMP Securities is one of the highest targets at 315. That's about 25% above the current trading levels. So let's take a look at how we might get there. Close this. Yes. And we see the chart going all the way back to the IPO days, sideways for a while, trended higher, COVID crash, new highs, and topped out around 310. And then we had the 2022 sell-off. New highs by a couple bucks, and then we sold off again. This was the May quarter here and the subsequent wrap. Now, You guys who follow me, you know I like the Fibonacci levels. If we simply draw a retracement from high or lows to highs, we have a perfect buy zone in here with a 61.8 test. That gives me targets up here at 352. And this is what I call a macro target, so it's over multiple years. So for you short-term guys, let's look at the daily chart and see what we can do shorter term. And I actually really love this setup. We had that gap higher in earnings, highs to lows. It creates a resistance level at 255, which is really aligned with this 200-day moving average, the red line at 252. We can see the stock filled the gap and is trying to push higher above the blue line, which is the 15-day moving average. Now, what you want to see as a bull is to see this blue line over the red line. That's a golden cross on the 50-day is over the 200-day moving average. In addition to that, you want to see the 255 level break. That happens. I'm targeting 287. This is a 161.8 extension of this Fibonacci level retracement that we drew here. So shorter term 287, longer term 350. I like this setup into next earnings. I think if earnings impress, we can get here. And then next year, you're really looking for that 350 level if this earnings trend can continue. I like Workday. I think it's got a lot of things going for it, not only in the fundamentals, but in the technicals. I think you want to own this in the earnings, probably add to it after earnings, and I think you can be a big winner early next year. Okay, that's it for me and Workday. Here is Brian Bolin with his pick.
Well, thank you, Jeremy, for sharing your top stock pick for the week. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zacks, and my top stock pick for the week is Tesla, TSLA. I'm sure you've heard of this company. They make electric vehicles, robo-taxis, and pretty soon they'll be making robots. They had a big event the other week, We Robot, where they had the robo-taxi event, and it crushed the stock from 240 to 220. Now they have earnings coming up. We already know the deliveries number, so really the proof in the pudding here is going to be where are their margins, and what's their burn rate like, and what's happening there. So let's go ahead and take a look at the numbers that I always love to look at for Tesla or any stock. As we can see, there it is, Tesla, TSLA, longtime fan. I own a Model X. I love it. It's a X rank number 2. It's a buy. F for value, F for growth. The style scores don't necessarily like it. And as I mentioned, they're having earnings later this week. I guess that would be Wednesday after the close. $705 billion market cap. And this number jumped out at me. I know it's going to make my video pretty long to what I'm used to. But 271, calling it the all-time high. If you remember back several years, that was the all-time high, but there's been several splits since then. So it's kind of an eerie coincidence that 271, again, is that resistance level. But we know what happened to that resistance level last time. You chop right through it. All right, so let's take a look at the numbers that we love to look at. First, we're going to go to earnings. Are you beating the number? And no, and really no. If there is a glimmer of hope inside of this, we're making money at Tesla finally. I know there's a lot of people for years clamoring about how they can't make money. Well, they're making money. What are the estimates doing? I do want to point out that Daniel Ives, he's pretty aggressive on this year. So that's 73 cents for him. You've seen him on CNBC a lot. He's a talking head. He's out there. He wore a crazy outfit to the iRobot thing for publicity's sake. Good for him. All right. This quarter, 59 cents down from it's 58 cents, down to 58 cents. So next quarter, holding steady at 67 cents for the full year, going from 228 to 225. So that is a downward slope. And this is another downward slope going from 316 to 302. So estimates not really looking good here for Tesla. But this is a growth story. And we are going to be getting a good talking to about what's going on with Cybertruck. And so we're going to have minimal sales numbers here on Cybertruck for this year. But next year, I'm going to tell you this number is pretty light because I think there's going to be a lot of Cybertrucks built next year. So they're going to go to 100 plus billion. They're going to go to 100 billion this year, just a little bit shy. And then next year, it's going to be way up there. So Cybertruck is your focus for me for this coming quarter. Let's talk about the valuation here. 98 times earnings, which is a lot considering lackluster growth most recent quarter. But, that Cybertruck, again, I'm going to tell you, it's going to be everywhere soon. You're seeing a few of them. You're going to see a million more in the next year or so. All right, 10.5 times book is a lot of money, but they are an asset-heavy company. They got gigaplants and gigafactories and gigacars. 7.5 times sales. Margins, this is what Wall Street's worried about. This margin trend, we're waiting for the report here, but, the wrong way there on the margin. So we want to see those margins turn around. Hopefully the Cybertruck margins are better. I know the pricing moved up on them, so maybe that's going to help. But, what are you going to do? All right, so here is the chart for Tesla. Pandemic, and we're not going to die, and it's moving up. Tech wreck of 22, a little bounce back, and I'm going to say that the stock price stuck in a range, fairly wide range. Estimate lines, not looking good. I will say that, not looking good. All down. Bunch of misses, not looking good on the estimates side there. But if you're with it, if you're in it to win it like me and ready to risk it for the biscuit, I like Tesla for the earnings call coming up, because I think they're going to give us some good information about that Cybertruck, and they're going to tell us about the early reviews, and they're going to tell us about production increases, and that is going to be a revenue and margin driver in all of next year, and that's going to build the excitement. I want to go back to an October quarter several years ago where the stock really lifted, and I think there was a difference in the margin profile. If we get that margin profile increase, you can see this stock really move, because I think the shorts have come back into it. All right, that's it for this week. Be sure to join us again next week when we've got 2 more top stock picks. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.